Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. I'd like to bring you some commodity charts to look at. Now, I'd usually look at the day-to-day movements of the markets. However, this time I will concentrate on the longer-term view, looking usually at monthly charts and at most weekly charts. And the first one I'd like to look at is spot gold. 2019 has been memorable for breaking out of the deep malaise formed since early 2014 through to the end of 2015. Within that malaise were formed one, possibly two potential patterns that may determine the course ahead. The first pattern is a well-publicized reverse head and shoulders pattern formed over 2013 to 2017, with an additional shoulder formed over 2018 going into mid-2019. You can see it clearly on a daily chart. The second is a more subtle one, a wedge pattern, possibly ever so slightly bullish, formed since mid-2016. Now, the head and shoulders pattern, reverse head and shoulders, has initial optimized topside target X in the 1690 area. The rise up over the recent 50% Fibonacci line at 1485 and pullback coincides with a likely throwback from the 1550 area as part of the reverse head and shoulders pattern. We can see the market throwback and the drop all the way down, or all the way to the neckline, which is currently at 1355. And the head and shoulders pattern still looks good. The wedge pattern is a little more complex. The break topside looks to just about have managed to reach target X2 for such a pattern in the 1570 area. It may be that we're on for both patterns, and that's the throwback to the neckline, should it occur, will rejuvenate the bullish incentive and prices rise, fulfilling both targets. Watch to see what happens should we get to the neckline. And if we turn around and head north now, what happens at 1570 and what happens at 1690? The next chart to look at is ICE Brent crude oil futures, front month continuous. Considering how active directionally, or both active and directionally, this market has been in recent years, 2019 can be chalked up as a year of calm, an inside year if you like, caught between the Fibonacci levels at 60.52, 60.95, 65.53, 70.54 and 71.41 for the most part, as well as the 2016 to date uptrend currently at 58.5, and the more recent April to date downtrend currently 69.20. Once we can get confirmed closes outside the two trend lines, then we might have an idea of the longer term direction of this market. That being said, even as the uptrend shows as a strong three-quarter, I suspect now it is vulnerable. The next chart I'd like to look at is New York Sugar Futures, front month continuous. The failed key reversal down in September 2019 proved to be a watershed for this commodity. The subsequent bounce back up to the 61.8% absolute fib for the 21st century at 1383 covered the whole of what became 2019's action. We did thereafter trade well within these strictures until two contrary market actions appeared. The dead cross of the 3-year moving average, currently 1340, down through the 5-year moving average, currently 1431 back in July, and the contrary bullish monthly harami in September, which has led to recent move higher and the about to be tested 21st century 61.8% absolute fib again. I suspect the market may make a better effort than it did the attempt back in 2018, so watch carefully. The next chart I'd like to look at is Chicago soybean futures, second month continuous. This is a well-behaved market. It is traveling down smartly and patiently within the tides of the bearish June 2016 to March 2018 shift pitch hook, and is currently between the upper, currently 960, and the middle, currently at 844. It additionally has as a topside resistance both the 3-year, currently 939, and the 5-year, currently 950 moving averages, and has shown itself to be anchored a little around the super key 50% absolute Fibonacci level at 895. The only issue in the immediate future, and it could be a huge one, is that we may have a monthly key reversal up for December. If we close at the end of the year at 933 or higher, then we're on for one, so watch carefully. That about wraps it up in the meantime. So, good trading.